Mutual funds investing in the PSU theme have delivered humongous returns of more than 40% over the past 1 year. While the earnings of these companies have improved, this uptrend can continue for much longer. Since these companies are at the core of the Indian economy, they can continue to perform well if the economy continues on a high growth trajectory. These were views expressed to us by Mr. Yogesh Kalwani, Head of Investments at InCred Wealth. And while PSU stocks have seen a tremendous run up over the past year, the valuation of the theme continues to be at a discount to broader market indices like the Sensex and the Nifty. Do watch this interview if you wish to learn more about the prospects of the PSU theme.
Good morning, Mr. Kalwani, and welcome to our show.
Hi, Sanjay. How are you doing?
Very good. Thank you for taking time out to speak to us. The PSU theme has been doing incredibly well over the past 1 year. The funds that invest in these stocks have given an average return of more than 40% over the past 1 year. So I thought this was a good time to discuss with an expert like you what is driving this rally. Is this still a good time for investors to enter this theme, and so on? My first question to you is, what are some of the factors that have sparked the rally in the PSU theme?
Okay, so maybe it's important we step back a little and see what reforms and initiatives have been taken by Government of India. And that's resulted in good performance of these PSU companies, and then, of course, a catch up at the stock markets and performance in the stocks. If you look at from a governance point of view and reforms point of view, multiple initiatives have been taken across by the government. Started with the diesel price deregulation. It was not controlled any longer. A lot more free hand was given for all marketing companies. Of course, I'm talking about a broader patch. We can debate what's happening in the recent time, which is a little abnormal. But largely, if you look at from a past, the diesel price were deregulated, and that helped oil marketing companies do far better in performance. There was insolvency and bankruptcy code that helped in recovery of NPAs. Finally, the banks and regulators had the teeth to kind of resolve NPA issues and ensure that a proper credit culture was built in the country. So that's was a very big reform, and it helped PSU banks get back the balance sheet strength and focus on expansion and credit growth back again, and resolve some NPA issues which were long pending. Then you had the gas companies which got focus, and you've seen a huge reforms happening in the gas sector. And there's, I would say, a focus given by the government to improve both the availability and network logistics, availability, transmission of gases, etc. The next one was on power reforms. We've seen distribution losses were a huge issue that got resolved with the DISCOM reforms and distribution company reforms, and power cost really came down because you had more efficiencies and lesser losses. So and so forth. There have been multiple reforms. So you've seen railways going through a huge upswing. Vande Bharat is an example. A lot more other addition of changing the line from a narrow gauge to the bigger ones, and so and so forth. So the railways, huge investments have happened. Atmanirbhar, make in India, use in India, defense being a large example there. Rather than government wants to be self-reliant, and most companies there, a lot of spends on the defense are being done in India itself. So the entire budget, upwards of 60% would be spent in India, and companies will be kind of provide all requirements of defense, make locally and provide locally. So that's again a big focus on sourcing locally, and Atmanirbhar. So all these initiatives have led to a revival in PSU as a segment. Now, it used to be a darling of the stock markets earlier, and it went through a issue phase due to all the problems which was faced, and hence these reforms over the last, I would say, 7-8 years have helped revive these companies. And coming to the stock markets per se, that's the reason why you've seen a huge uptrend in the markets and in the companies. PSU, if you it's a very broader kind of a theme. It's not very limited and restricted to one segment. While most people know PSUs as PSU banks, because that's a big, large chunk of companies there. But it's spread wide across. You have power companies, you have utilities, you have railways, railway infra companies, you have logistics companies, and a very wide range, metals, minings, OMCs. So it's a very broad theme, and it can be played. Unfortunately, it doesn't have the desired allocation in most investors' portfolio, and hence it makes sense to do a specific allocation and get a participate in this uptrend, I think, which has resumed after a long break. I think I'll pause here, maybe.
Roughly during what period did this theme underperform? And from when did this rally begin?
So you're right. Like I was mentioning in my previous comment, 2001 to 2011 was a great period, I would say, for PSU and PSU theme and PSU stocks. It did phenomenally well. It really did 2 times the performance of the Nifty or BSE Sensex as a market. So if I have to put some numbers, it's like 10, 11 times as in that 10-year period, compared to BSE or NSE being about 5 odd times. So it really outperformed in that phase. But from 2011 to 21 is where you had a huge underperformance, a decade of underperformance, wherein they underperformed by about 39-40%. The markets were down, or the PSU index was down about 40%, whereas the markets were positive. They did about 2.5 times in returns. So the market did extremely well, Nifty and BSE Sensex, whereas the PSU themed stocks and indices underperformed by giving negative returns in this period. 2021 onwards is when we are seeing resumption. It's still, I would say, early days. We have just seen investor interest getting back in this category. We have seen about 60 odd % returns in absolute term over this period, as compared to index doing about 28-30 odd % return, BSE Sensex or Nifty, the way you look at. So it's outperformed recently, and it had a decade of underperformance. Hence, in the valuation terms, both on price to book basis, on PE basis, while it's improved, but it's still trading at a significant discount. To give you some numbers, say on a PE basis, PSE theme or index would be about 9 odd times. Compare that on a trailing basis, I'm saying. Compare that with a BSE Sensex or a Nifty, which will be on a trailing basis about 20 to 23 times as a number. So it's about 60 odd % discount to the Nifty and Sensex PSE indices. On price to book basis also, if you look at it, PSU theme index would be about 1.4 odd times. Compare that with a BSE Sensex or a Nifty will be about 3 odd times, I would say. So 2.8 to 3 times. So that's the kind of valuation gap which has got created. And of course, the companies have started to do better. You've seen order book growth, you've seen ROE returning, you've seen balance sheet strength returning, and growth coming back in a big way. So
what about
that's
earnings?
the
How are earnings of companies?
Earnings have improved in a major way. If you look at earnings growth will be about, if you look at 17 to 21 as a period, they grew faster than a BSE Sensex or a Nifty. And in terms, it would be about 22 odd percent as a growth CAGR, compounded annualized growth rate on earnings, as compared to BSE companies about 14-ish kind of a number. The reason I'm saying 21, because post-COVID, it's very difficult. It's important to leave that 1 or 2 years out for earnings growth comparison. So it grew much faster than a private company, I would say the indices, which are a mix of private and public companies, BSE Sensex and Nifty, at about 22% compared to a 14 odd percent, which is there in 17 to 21 as a period.
What are some of the strengths of this theme? What strengths do these companies bring to the table?
See, these are core sector of the economy. So if you look at a lot of these companies are very important and strategic from India's point of view as such. And they're present in areas which are very relevant, I would say. So you talk about metals, minings, OMCs, utilities, power distribution, gas network, and say IRCTC, which is an online train ticket booking service. So you have defense in a big way now. It's a theme which is coming up, and you have defense stocks which have done extremely well over the last 2 years plus. And so defense as a sector. So all these are very core to India. And the theme which India is getting to is self-reliance, Atmanirbhar. For that to become successful, while the private sector is doing its bit, if you look at the capex, is largely driven by Government of India, because that's where the investments are happening in the economies and core sectors where the government believes there is a need to focus on and build infra from a next phase of growth perspective. So it's a core of the economy. If we believe India will grow at say a shade of 7% real GDP and a nominal GDP of 11 odd percent or 10 to 11% band, these companies certainly will outperform and grow faster because India has a requirement to provide and build an infra investments, do a lot more locally on the manufacturing and logistics, road, utilities, power, all these sectors. So it's a core of the economy. It's not really a consumer play, which a lot of investors are focused on, and the companies are valued at upwards of 50 or 100 times on a PE basis. This is a value part wherein you have a good value, and it's a core of the economy which will continue to do well and is being ignored by the market currently. And that's the reason the strength lies in both this being core and will not go out of fashion. It will continue to be a resilient part of India's economy, given that it's likely to grow in double digits in nominal terms over the next decade or so.
And what are some of the weaknesses of this segment? For instance, one hears that the government is not a very efficient allocator of capital, that there is too much government interference. Things are not very market driven. Could you dwell on that aspect?
Of course, these are typical problems and rightly mentioned, these are risks which you see on these companies. That's one of the reasons it underperformed for a decade. You didn't have the right policy reform. You had too much government intervention and poor allocation of capital. But the current government is managing it in the right way. That is the biggest risk. If there's a government change and we see policy change and reform change and intervention into running of a PSE coming back, we will not a good time to own these companies and stocks. or this theme. But I think there's a huge realization that if India has to sustain, and for example, China has done it right. A lot of other countries have done it right. While there is a huge debate on what should be privately owned and what should be run by government, uh, 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 I mean, that's a transition which happens over a long period, and you need that kind of depth and width in a private sector to come and participate in every part of the economy. Now, if India's has to provide all its services, right from logistics to utilities to power to oil and gas and metals, etc., the presence of government sector there is essential for India's growth. Uh, 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 I think there's a belief which is right, and what government's trying to do is monetize or modernize. So you either monetize by divesting it, that this is not my business, I don't want to be in this category, and private sector runs as the best, and I will monetize. I'll do a disinvestment and sell it off. Or modernize in a modernize in a manner which is change. Look at what their company is doing, what's the right thing to do, how the world's changed, adapt. Defense is a classical example there. We had a bunch of companies which were ignored and were never given attention to. Railways is a classical example. There was not enough order flow. There was not enough done there to modernize a railway network or source defense equipment from India. But there's a focus to kind of change that. So I think the government's doing the right thing. But yeah, the government remains the biggest risk in this category.
Would you like to comment on the valuations part? Or
yes, so there's like I mentioned, there was a huge outperformance phase in 2001 to 11, and then a huge decade of underperformance. Currently, on a valuation terms, they're still a lot more attractive on P basis, price to earnings basis. It's 60% cheaper than a private sector or a BSE or a Nifty index, PSE index, I would say. And even a price to book basis, it's half of what BSE or Sensex or a Nifty is, 2.8 or 3, compared to a PSE index, which is 1.4 odd times. So definitely on a valuation terms also. Again, not to forget, very, very critical point, dividend yield on these companies are phenomenally higher. So because governments are the biggest owner, and for financing their deficits and fiscal deficits, etc., the companies pay a higher dividend. So the dividend payout ratios and dividend yield on these companies are much, much higher. It's in a shade of 4.5, compared to what a private sector pays out is about 1.3 to 1.5. So you get a much higher dividend yield. Before this rally, there were some stocks available at even a 6-7 times dividend yield ratio. So there's a good dividend yield ratio. The interests are aligned from an investor point of view. The shareholders' returns are much higher in PSE companies because government wants they're the biggest owner. They want to also take the money back for running the deficits, etc. So dividend buybacks, everything is more favorable from a shareholder perspective. And from a governance standpoint, there's no issue. So that's a big factor and a positive. Dividend yields being high and valuations being much, much cheaper.
so do you think investors can still go for this theme even after this huge rally? Will earnings growth continue?
So yes, there's a long runway on earnings growth. You would see this trend is started and right things are being done. Like we said, policy reforms and governments doing the right thing of building in India, making in India and consuming in India perspective, reforming these companies, modernizing these companies. So there's a long runway, and we have seen that in order book flows and earnings both. Markets always are, they're not always fairly valued. They're always ahead of fundamentals or behind fundamentals. They were behind, the company started to do better much earlier. the market did a catch up between 21 and till now, till date. We feel there could be a pause. I would say, and it's a healthy pause. I mean, all the returns don't need to be made in a very short period of time. Since the companies are growing and they'll continue to grow, the sectors are wide. You have multiple sectors. It's not like a single sector play. You have banking, finance, you have utilities, you have logistics, you have OMCs, oil and gas companies, various things. So we believe it's an allocation which people have to do with a 3+ year mindset. Stagger investment in the near term, purely because you may have purely from a better rupee cost average perspective. You don't want to get a bad entry point, and you want to do an average in so that you have a better cost average of your investments, which you plan to hold for a 3-year plus perspective. And I think it will there's still a long scope, because on a valuation terms, it's still cheaper even after this rally.
So take the SIP route and have an investment horizon of 3+ years.
3+. Yeah,
is
but
there
I would
any
say
other advice you would have for fund investors?
Yes, so there are thematic funds. See, again, like I was mentioning, it's a space where investors are under allocated, and these are large companies which are there, and they are critical, I would say, strategically important and critical companies. Now, by buying a normal regular mutual funds, of diversified mutual funds, flexi caps and large caps and multi caps, etc., every fund manager has its own views. We have seen there's an under allocation by active fund managers to PSU theme. It's not everyone believes it's in space to get allocated. People have their own views. So now, if investors want to capture this theme in their portfolio, they need a specific allocation of a thematic fund. And that's where a PSU funds, there are 2 funds which I can just name. There's an Invesco mutual fund, a PSU theme fund, or an ICICI Prudential PSU theme fund, which are good funds which specifically allocate to these themes. Having a specific allocation to this helps you not miss out on this component of the market. And one has to look at from a 3-year perspective, and that's a allocation which is being missed currently in the current active managed diversified funds which are there.
And how much should be the allocation? Say, if you have 100 rupees allocated to equities, how much should go into this theme?
See, in our mind, up to 15% can go into this theme as such, up to 15%, depending on the profile of an investor, how I would say, is it a moderate or a growth or a aggressive profile? Depending on the risk profile of an investor, up to 15% can go. Again, I would rate this a more diversified play compared to a thematic sector play like a banking, finance, IT, or a pharma. Out here, you have multiple core economic sectors which get covered by these funds. So hence a lot more diversified play, and hence investors can go a little more heavy on this allocation relatively.
Thank you, Mr. Kalwani. I think we have had a very fruitful discussion. I'm sure our viewers will gain immensely from it. Thanks a ton, and have a good day.
Thank you for having me. Thank you.
Goodbye.